joining us first up is Rahul Arora, CEO of Nirmal Bang Institutional Equities. Rahul, hi, good morning. We've seen the massive event come and go. There was big rally ahead of the event, but it hasn't been followed up after that. I mean, yes, the market is up, but it's up in the broader market, not on the Nifty. What's the call now, according to you?
Well, Anush, the last time we spoke, we were expecting the Nifty to head towards 7,100 on or before 16th, if you remember. Yeah. And we had said that the verdict, if it's favorable in BJP's half, if it were, the Nifty could scale up to 7,500 plus, as you were talking about yourself. I don't think that view has changed by and large. I think there's just momentary pause because the rally has been quite phenomenal from where it started in August. The index has gone up nearly 45% plus. So I think, as you were alluding to, a couple of days of FISL figures I don't think changes anything. But I think the broad trajectory, as far as we're concerned, and even our clients, I think the first big trigger they're waiting for is the cabinet formation and then the budget. I think there is a dash of hope that we could head to anywhere between 7,500 to 8,000 between now and the budget, depending, of course, that nothing dramatically goes wrong globally at this point in time.
Rahul, hi, good to see you in. You must be very busy post the election mandate, but I just wanted to take that point forward with regards to the cabinet formation. How important is the finance ministry and who gets the finance ministry to the markets? Because the view is that it doesn't matter that much as long as you have the Modi leadership in place. Is that the view, or are markets looking keenly at who is possibly going to get that?
I think that's purely an academic discussion now, Ekta, because I think I don't think the eventual person who's going to head the finance ministry is going to be anyone different from the names that have already been spoken about or speculated by media. I think the name is going to be one of these. And as you rightly point out, I think by and large the NDS policies are very, very well known, whether it's with respect to taxation, infrastructure, tourism, etc. So I don't think who the finance minister is going to be as critical vis-a-vis certain issues that they deal with respect to subsidies and what impact it could have on fiscal deficit. You're already seeing the first signs of the gold restrictions being eased. If, just to take Anuj's point forward, if a short-term trend develops where FIs sell for a bit and take profits off and there's a mild pressure on the rupee, how would you deal with issues on CAD, for example? So I think the policy formation by and large is clear. I think it's purely academic who will become the finance minister, but what I can tell you is at least our institutional clients are looking at this as a very, very big event because he has a virtual free hand and this could actually be a budget that people are in hushed tones talking about being equivalent to what Dr. Manmohan Singh would have presented or Chidambaram's dream budget, because as Anuj was saying, he has pretty much no restricting hand at this point in time. So I think that the person is academic, the hopes are tremendous.
All right, Rahul, since last few days have been all about individual stocks, any new fresh ideas that you can tell our viewers?
Well, Anuj, the last 3 or 4 times that we have come, we've spoken about defensives more so, but obviously the trade has shifted from there. We are starting to look at the capital goods and engineering sector with some amount of interest. Obviously, the valuations there fundamentally are starting to look a bit tricky because, if you were to give a buy call on a capital goods stock today, whether it's a BHEL or a Thermax or a Crompton or a Voltas, and you were to justify a 20% upside on these stocks would actually be trading at 25x FY16 earnings. It's already gotten pretty expensive, and I think that's what you're seeing in the FI and DI figures over the last couple of days. Having said that, I think there are a couple of ideas that we do like. I think Triveni Turbines is one that we have been recommending. We initiated that stock at about 45 bucks. It's done really well for our clients. It operates on a net cash X working capital cycle. It's got about 45-50% kind of return ratios. It has a tie-up with General Electric. It's a market leader in 0 to 30 megawatts in terms of turbines. G's joint venture is between 30 and 100 megawatts. That part of the order book is scaling up. And the margin profile is tremendous. I mean, very few companies in this space that are debt-free and give you these kind of return ratios. And we're expecting very good free cash flow generation over the next 2 years. So that probably will be one of the top ideas. Bajaj Electricals is another one that we like in this space. I think there the valuations are a little more comfortable at about 17-18 times FY16 earnings. And maybe a KEC International, if you will, at about 12 times 1 year forward. I think these probably would be the more valuation comfort related stocks in the engineering and capital goods space at this point.
How would you approach Coal India and the gain that we've seen of 7% today? Is there any merit in terms of the run-up that we've seen, and how would you approach it in terms of a stock pick?
The news reports today are going to take a very long time to fructify. So I don't think playing it on the fact that it may have a different organizational structure in time to come is the right way to do it. Having said that, we're actually having a formal sell rating on the stock because we met with the management recently. We've not come back feeling too comfortable on the volume guidance that they've given, and Coal India historically has missed out on its guidances. So this is not a stock that we would generally want to play in the commodities basket, if you will. Having Having said that, there are certain other stocks that we would like to recommend in this basket. I think we still like Sesa Sterlite for one. That's an interesting one. We still continue to like NMDC. And in certain smaller stocks, we continue to like a stock called Indian Metals and Ferroalloys. So I don't think Coal India on this news should be played too much. I think fundamentally there's still a knot that needs to go right. And obviously, I think this administration will move in that direction, but I think the call is still far off. I think fundamentally, I would not be a buyer in Coal India at these prices.
What about Maruti?
That's an interesting one. I think there's a very large buy call given by one of our global competitors this morning. Having said that, Anuj, I think if you're going to play on the revival, I think Maruti in the passenger vehicle side is probably the best stock to play. I think, we are incrementally turning positive on Ashok Leyland and Eicher also. I don't think a lot of these stocks need to be looked at evaluations, to be very honest. I think when you look at price to earnings, there is the price element which has the sentiment component and the earnings which will sort of catch up. So I think the earnings catch up will have to happen now. At a 7,300 Nifty, you are going to start asking questions. And I think on the hope of the revival in the economy, and that will hold true for cement also. I think if you start seeing some of these cement stocks also have done really well. So would I be a buyer at Maruti at current prices? I would like to see a few results pan out a little better. At 2,300, I'm not sure if I'd be an immediate buyer. But yeah, this would definitely be a stock if I get on dips, I would definitely look at buying into.
Okay, Rahul, just coming back on your view on capital goods, you have a positive view on the sector, but what about infra/power? Because we've seen a strong run up in all of these stocks, but would you be select in your buys there, or would it just be a blanket buy because eventually there will be some amount of turnaround?
It would be a case-to-case specific thing, Ekta, because I think, when we had initiated on the infrastructure sector, were positive on certain stocks like Ashoka Buildcon, IRB Infrastructure, Sadbhav Engineering, and I think that tilt by and large remains on some of these stocks. I don't think it would be a blanket buy across the board, because I think if you look at some of the larger names in the sector, the debt to market capitalization is still 8 to 10 times, and I think there the key trigger is not going to be so much so the election outcome as much as it's going to be the interest rate cycle, because if the interest payout is going to come lower, that itself will feed into the market capitalization and will sort of, make the enterprise value of those companies go up. So I think that the bigger play in infrastructure will probably be more to look at companies that have manageable debt profiles, where they could be very serious contenders to get very large projects. So I know today's newspapers have reported that the immediate target of the new government would be 12,000 kilometers on roads and highways. But I think within that space, we would look at stocks like Ashoka Buildcon, IRB, and Sadbhav Engineering would be some of the ones that we would recommend.
Okay, IT has corrected quite a bit, because of what's happened to both currency and the fact that the market has moved to, has moved out of defensives. But what's the call now on stocks like Infosys, HCL Tech at your house?
We will be buyers, Anuj, because I think the price correction has been quite steep, the time correction also. I think rupee at best can be a headwind or a tailwind. I think the fundamental economics governing these companies is by and large in place. I think if you looked at the results of the IT companies this time, the US and European regions have done pretty well. And I think on volume growth also, they've by and large done pretty well. So I don't think there is any concern on the fundamental volume. Yes, we also as a house have upgraded our rupee targets to 58.5 and 57.5 for 15 and 16. But Infosys, TCS, HCL Tech, Wipro, and even in the mid-cap space, something like an Infotech Enterprises is something that we would actually advise people to come in and start buying at these prices. I think the valuations are looking quite attractive, and I think the outlook is pretty strong on most of these companies.
Okay. Rahul, just wanted to take that point forward with regards to defensive portfolios. Say out of 100%, how much would you position towards defensives and cyclicals now?
The immediate trade would be probably 60-40 in favor of the in favor of the beta sectors, if you will, at this point in time. But I think the valuations, as Anuj was alluding to, I think even in pharma have come off quite substantially. I think even if you look at some of the large cap pharma names, I think there's a reasonable amount of interest that's actually coming back in these sectors. So I think probably 60% beta, 40% defenses may not be a bad thought. The reason I say that is because and I don't want to overanalyze statements, but having heard Mr. Narendra Modi the last couple of times, he has spoken on a public forum. He has spoken of having a pro-poor tilt. So a lot of the initial euphoria that probably the market had, that he'd probably be swinging too much towards industrialists. I just want to wait and watch on how he deals with certain pro-poor policies before taking a call on, sort of beta blanket across the board. So that's what I would say. I think it's best to play safe. If we had this conversation at, say, 6,500 Nifty and he had come in with this mandate, I would probably say 80-20 or maybe even 90-10. But at 7,300 and having this conversation at the cusp of a budget, maybe 60% beta, 40% defensives may not be a bad way to go.
Okay. Fair enough. Rahul, any disclosures on all the stock picks you've given us?
Personal holdings, none. A lot of these stocks that we have spoken about would have been recommended to clients.
Okay. All right. Fair enough. Thanks, Rahul, for joining in and taking us through all of those stock picks. Remember,